All right. So good evening, class, and anyone that's listening to this YouTube video. What we're going to be talking about now is the strategic planning and management flowchart, which I did for a strategic management class at California Baptist University in the summer of 2020. So what we're going to do, first of all, is I just want to show you guys how to download this this software. This concept map software is wonderful. It was created by a academic institution in Florida that was working with one or more universities, and they actually created the CMAP software to encourage people to to give them a really valuable tool in terms of concept maps, and then to encourage people to to be able to help them with ideas and things. So this is the website. As I clicked it from our announcements tab. But for anyone else that's listening, you can see that up there. cmap.ihmc.us is the website URL. And then downloads. It's a free download. It's there's really just so many nice things on the internet that don't cost any money, and people monetize it in other ways. So I like to take advantage of these whenever possible. So anyway, so that's where you download it. Please, I really encourage you guys to do that. It's like I say, it's free. Free is good. Okay, and so then when I go back to our announcements tab, did I lose it? Let's see here. I'm supposed to open a new window. Let's go back. Okay. So let's look at I sent you a PDF version of that strategic management flowchart, so you don't have to download the software. But let's actually go to the software, the file that's in the software, because that has hyperlinks that I put into it, which will be handy. So we'll go through those. So there's the file will be coming up. If you guys have any questions, don't hesitate to ask away. You all can hear me, right?
Yes, you sound great.
Cool, thanks. I've had too many of these deals where I've been talking away and then realized that no one's been with me for the last half an hour or hour, whatever. One time I think I talked for a full hour without realizing I'd lost everybody. So we're all learning to cope in this new remote environment and so forth. Okay, so there is the strategic map that I created, and I actually created this the first go round of this. I created, I don't know, 3 or 4 years ago. Would be my best guess. It would have been sometime between 2015 and 2017. So that would make it like 3 to 5 years ago, I'm guessing. And I was, running several programs at another university. My position was something akin to an associate dean at this particular university. I had all the undergraduate programs, and then the graduate business programs and the graduate doctorate programs. And so this was actually an MBA strategic management class I was teaching. I actually taught the strategic management at this university several times. And then I've always been, I think I mentioned to you guys at the beginning of the class, I've always been frustrated with strategic planning and management because there aren't a lot of, in my opinion, and having taught this course a number of times and just digging through a lot of material and so forth, there's not a lot of really, I guess for lack of a better word, concise flowcharts or plans to talk about, how to actually do strategic planning. And actually at the time too, in addition to running these academic programs at this university, I was also doing a lot of strategic management consulting, to little companies. And then one of the little companies I was consulting to I must have done a pretty good job because we were on track. There were actually turned out to be another little hitch, but we were on track to raise a lot of money for them. But they've become my partners actually in a current venture that we have, Northwest Quadrant Opportunity Fund. So so things really worked out well. But when I really went on full time with them, pretty much in terms of my dedication, or my spending my time with them, and then and then now the new venture, I really haven't done much strategic planning consulting, strategic planning management consulting since then. But I put together this flow chart that you're looking at during that time when I was both teaching it and also working with a lot of little companies in terms of their own strategic planning. And again, I was kind of frustrated just because there wasn't, we had a lot of books and a lot of resources, and it's the same thing we have now. We read Amazon and we read other things, and everyone's got a different approach to it. I think I showed you that one handout, which I'm going to actually post to this little flow chart here. By the way, these little boxes here underneath, I'll show you in a little while here, but if you click on each one of those, you actually get like a link to a website. So like, I don't know if you saw that one there. Let's see, here's another one, Lean Startup. All of these are links to outside websites. So we'll look at that in a minute. And so anyway, I'm gonna post a lot more resources, as I mentioned in the email I sent out to you guys. This is kind of a work in progress, but this is the basic structure. I don't think this basic structure will change much unless, as we discuss it, maybe you guys will have some other insights and things. I appreciate whatever thoughts you have, but this seems to be a format that works pretty well. I worked it out with my other MBA classes when I first put this together, and this is based loosely. Very, very loosely on a book. Let's look at that one actually right now. So if I go to this McKinsey Way, McKinsey Mind. So if I click on that, that little document there, click on the hyperlink, and that takes you to actually Amazon, because all I'm trying to do there is show you the book, show you what the book is that I'm referencing. Not suggesting you buy the book or anything like that, but I wanted to give you guys a real good visual of what the actual book is. The guys that wrote this book were two ex-McKinsey. It says my internet connection is unstable. I think that's not too true. So there's the McKinsey Way and the McKinsey Mind are the two books. I think they've written a couple others too, but those were the two I'm really referencing here. And so this structure is based on a lot of things, but it's based somewhat on the reading of this book. I was a military officer, as you guys know, and so we always had strategic, planning, processes, flowcharts, methods, and so forth. And strategic planning isn't really a great deal of difference whether you talk about a military context or a business context. You go through some basic processes, and that was what this process was meant to show. But more importantly, I was hoping, and I think we've accomplished this. I'm hoping to show that there's a structure we can actually call strategic planning and strategic management, and that all the things that we've been studying in the past 6 weeks, including tonight and next week, all of those things will fit into this framework some way, somehow. And so again, I'm really trying to give you a flow chart, if you will, that when you're done with the course, and whether you're consulting, which some of you may do, or you may be working for a company, you may be starting your own company. It doesn't matter. The process is basically the same in terms of when it comes to strategic planning and strategic management. So let's see how that looks. So we start over here on the left with a start box. And the first thing we do is we appoint a chief value officer. Now that's a concept I came up with pretty soon after I did my doctoral dissertation work. And as you know, as you may know, my doctoral dissertation was a theory of value drivers. The title was The Theory of Value Drivers, a Grounded Theory of Study. But basically, the the value creation process chart, which we've been talking about, which we'll look at here in a few moments, that describes, and we've spent a lot of time in that in the class, that describes basically how value is created, and which is all part of the strategic planning and management process, because it's my contention, and I think many or most people would agree, that really the ultimate objective of any corporate manager, any enterprise manager, is to create value for the shareholders, with an asterisk to saying that it could also be creating value for all the stakeholders, as John Mackey and the conscious capital folks might maintain. But it doesn't matter. You're still creating value for some group, either just the shareholders or all the stakeholders, and the process is still pretty much the same. So I came up with this concept of a chief value officer, because what I've found, and I've found this even more now in the last 8 or 10 years since I started working on the dissertation and published it, and so forth, is that the value creation process oftentimes gets forgotten, or was never even really recognized in the first place in enterprises. I mean, people go to work and they maybe get hired as a whatever mid-level manager or low-level manager, and they get promoted. Everyone has different agendas, and usually those agendas, until they get maybe into the CEO role or one of the C-level roles, and then they really start thinking about value creation for the enterprise. It's more about doing my job, getting promoted, getting benefits, getting time off, raising families, and all the kind of stuff that people get involved with, and get distracted from the real mission of what the company is all about. And so the chief value officer, that person, their role is really to keep reminding everyone in the company, from the C-level right on down to the receptionist answering the phone, that everyone's job is to create value in the enterprise. That's why we're all there. And if we don't do that, every person, the people that own the company, which are the shareholders, they're going to start firing people, and it starts. The board starts with the C-level and it goes right on down. So the chief value officer is the person that really kind of keeps everyone focused on that. And some of the companies I've consulted to, including several of my own companies, we've had a chief value officer, and that concept and that position has worked out pretty well. Now, you don't have to have just a person dedicated to that. The chief value officer could also be, and quite likely would be, the chief financial officer, because the chief financial officer is the person that understands how value is created. And it's through, for those of you taking the financial management course, it's through the discounted cash flow process that we talk about a lot in financial management. For those of you that haven't taken that course yet, if you're taking it in the fall, you'll be taking it with me. What we talk about that process in great detail. But anyways, the CFO is usually the one that understands that process better than anybody. So that's often a role for that person, but it could be anybody. Okay, so we start with appointing that person, because you got to have someone that kind of directs the show and makes sure that things happen. So the next step is you calculate a baseline or a beginning intrinsic value. And again, here, let's bring up that chart real quick. So again, I'm going to, oh no, that's not the one I wanted. Let's do this one here. Okay. So again, in the financial management course that you've either had or will be taking, we talk about how to calculate that intrinsic value. That's what we spent a good part of the course on. Here we go. So it's in Intrinsic Value Wealth Report, book number 2, Think Strategically, Think Value, part number 1, Overview of Value Driver Theory. And if we go down to the value creation process chart, so you guys have all seen this many times, but we'll just go through it again here real quick. Should be coming up here in just a second. There we go. So again, I think you all seen this probably several times now, but what we're doing, this value of the firm's operations, that is the intrinsic value. You can also, if you want to carry it up here, not a bad idea. So you go through these other steps here to get the actual shareholder value. Those other steps are adding non-operating assets, which would be primarily like marketable securities. Subtracting out debt and preferred stock, that gives you the shareholder value. But the real intrinsic value, this value of the firm's operations, that's technically the intrinsic value that we talk about. And again, for those of you in the financial management course, we talk about how to do this. We talk about this in great depth. So I'm not going to do that here. You either have it or you will be having it. And if you want to review what that looks like, again, you all either have had or will have this textbook. So from Amazon, I'm not saying you go out and spend $237, but that's the book, Brigham and Earhart. And that takes you through in great detail how to calculate that intrinsic value. But see, it's important to do that. Going back to our
Professor, is that the book you're going to be using for your finance class?
After I said that, I realized that that's not the case. I wish it were, but I think they've changed the textbook. It's okay. Whatever we use, we'll still get the message across. The reason I like that textbook is, I always, having taught so many courses in so many different fields over so many years, for every different subject, I always have a book that I think is one that people should keep as like a desk reference, like the physician's desk reference, or engineers have one, and so forth. That's the one I think for financial managers. But it's kind of expensive, and I think there was some pushback on that. So whatever book we end up using, again, we'll still get the message across. But yeah, now that you mentioned, I don't think that's going to be the case. Are you taking the course coming up in the fall?
Yes, I will be taking your class again.
Good. All right. Glad to have you. Have you seen the textbook? I've not actually seen the textbook. Oh, I need to get a copy of the textbook now that I think about it.
I haven't even seen the textbook. Yeah.
So I'm glad you said something, because I need to make a note to myself to make sure they usually send that to me, but I haven't got that yet. So anyway, just make a note real quick. Textbook okay. Anyway, but the point is that we want to calculate the beginning intrinsic value. When I say the beginning, kind of the baseline, because as we go through the strategic planning and management process, we want to see if what we're doing, if we're accomplishing, okay? So again, if we accept the notion that our job, looking at this chart here again, that our job is to start with, a collection of kind of raw materials, if you will, these variables we'll call the secondary value drivers, of which there's an infinite number of them. We'll talk more about that in financial management. We use some management tools to identify them and manipulate them and strategically work with them and so forth. And then we start up the value driver chain, which kind of starts with sales, operating expenses, and so forth. This is an upside down income statement, right? So we're starting, the sales is at the bottom of the chart, whereas normally, of course, it's at the top. So it's just upside down. That's to kind of show how the process goes up when we're working up the value driver chain. And, so then we get free cash flows, and we have weighted average cost of capital. We'll spend, a couple of classes at least on calculating that, put it through a discounted cash flow model, and then that calculates the intrinsic value. So what we're saying is with this baseline, here again, with this calculating this baseline intrinsic value, where are we starting at? So in other words, what is the intrinsic value that we were working with on day one before we start this process, okay? Because when we get down here to the end, when we're getting to the monitoring, we're going to recalculate the intrinsic value to see what progress we're making. Are we making good progress? Are we making not so good progress? Do we need to make changes and so forth? You see there's a feedback loop here. So anyway, so we want to calculate that beginning baseline strategic intrinsic value. Okay, and so then there's what I call the blueprint here. And these are just kind of, know, they're blueprints, they're templates, they're frameworks to start, you know, thinking about the value creation process. And so this here, let me show you. This one's kind of fun for those of you. I've only had one person that I can think about in hundreds of students at a dozen or more universities that actually liked, that got excited about this chart. So let's see if I can find it here. Maybe some of you guys will be the next ones. You might take note of this, by the way, because, well, some of you taking the financial management course right now, or is that probably not, because that's given on the same night that this class is on, right? Pass my chart here. Okay, so here's the actual. This is what the colored chart is. So this chart is a colorized and greatly summarized versions of this chart. This chart, by the way, I took right directly from Brigham and Earhart, the financial management textbook, because I used that textbook for teaching for years. And then I added a lot of other things to show this value creation process. But this part right up here, where you kind of see my cursor, that's right out of Brigham and Earhart, really, because they do such a brilliant job of showing how to calculate intrinsic value. And so, so anyway, if this kind of stuff that excites you, I had one young lady years ago. I think this was actually an undergraduate class. I was showing to a finance class, undergraduate, and this young lady, she goes, I mean, she was just excited. She goes like, "Yippee!" And I thought, well, it's first time I heard that, but I'm glad. So anyway, so if you wanted to access that, you can access that from is it here? No, from here, from this little box. Okay, so the blueprints. So there's that figure 9. That's the figure 9 I just showed you guys. The value creation process chart, that's the colored one that we've been using a lot in the class. Chapter 5 is actually from my dissertation on value driver theory. So in a typical 5-chapter dissertation, the chapter 5 is where you present your summary and your conclusions and so forth. So for anyone that's really interested, they can go through that whole chapter and really understand what value creation, value drivers, and value creation is all about. And then the intrinsic value wealth report, that's just the one we've always been using on regular, this one here. So this website, it looks like this. That's the intrinsic value wealth report. I'm going to close that. Okay. So then let's see. Okay, so we appoint someone, the chief value officer, to kind of drive the process. We calculate that base intrinsic value, baseline intrinsic value, and then we look at some blueprints, because we're using those blueprints as we go through the rest of the strategic planning and management process, and keeping these blueprints in mind, and keeping the most important objective, and that being that that our job is to create shareholder value. Okay, so then we go through a discovery process. So discovering where we are, where we need to go, and so that's really kind of going back to the chart here. Let's see. There we go. So the discovery process now is we're looking at the value drivers that are available to the firm, and we're looking at the management tools that are available to us, and we're starting to consider what we do in this chain of events, these value driver chains, which is going to create the free cash flows that we discount using the weighted average cost of capital, the WACC, and that ultimately leads, when we go through the discounting process, ultimately leads to the intrinsic value, and then ultimately leads to shareholder value. And by the way, just to remind you guys that we've talked about this before, but the gold box here says shareholder returns, which are dividends and capital gains. Because shareholder value is like that intrinsic value line I've shown you guys before. But you can't take that to the bank. You can't, that intrinsic value. Actually, we should look at that real quick. So let's see, that's going to be over back here. See, in many respects, this is better than when I'm doing this on the board because you can never read my what I put on the board, right? Here's, again, you've seen this before a lot of times in class when I draw this on the board, but the blue line is the intrinsic value that we calculate, all right? But the gold box up here says that, so that blue line is the shareholder value, the intrinsic value that we created. The gold box is shown by the red line, okay? That's the actual market price plus dividends, or what the investors get out of their investment. Or at least for a publicly traded company, even if it's a private company, the value of the company is going to be based on that intrinsic value. And so, as oftentimes said, you can't take intrinsic value to I'm paraphrasing this a little bit, but you can't take intrinsic value to the bank. But it determines the market price. So anyway, so as we're kind of going up back here. So again, we're trying to use these tools, these concepts, these multitude of value drivers to figure out how we're going to increase the intrinsic value. Again, with the increasing the intrinsic value or the shareholder value as being our ultimate goal. Let me pause for just a moment and see if there's any questions or thoughts.
Dr. Wendee, I have a question. This is Dawn. So the baseline intrinsic value, that's something that we could, like, for instance, if we were trying to assess whether or not a stock was overvalued or undervalued, we'd need to know what the intrinsic value was.
Exactly, yes. Yeah. So it's the same calculation. So if you're investing, you don't really have control over management. So you're calculating intrinsic value, and the intrinsic value is always as of the actual value calculates actually as of today. So if you're going to invest, then you calculate the intrinsic value, and then you're going to say is the market price over or under that to make an investment decision. But using the same, I'm sorry, go ahead.
So I've seen the graph or the chart that you've shown, with all of the boxes, and the red box is the one we're trying to. I'm still confused as how we figure that out. If someone said calculate the intrinsic value of, like, say, the company that we just did for our competitive move paper, I would have no idea how to do that.
Well, that's because you haven't taken the financial management class yet, right?
Yeah. That's true.
We'll know at the end of the financial management how to do that. That's an entire semester-long process that we learn how to do that.
Okay.
Yeah, I mean, we spend.
Got it.
I mean, we do other things there too, but that's really 8 weeks we'll spend on just because each part requires a lot of discussion. So yeah, at this point in time, you're not supposed to know how to do that.
So we should not even be taking this class until we've had that other one.
Well,
really,
it's a thought. Yeah. Okay. That's a thought.
I'm like, I want to follow along, but I'm feeling a little frustrated because I feel I'm not capable to.
Yeah, I understand. No, and you wouldn't. But I'll tell you what, if you want to, this is for anybody actually. Let me just show you something else here. Well, actually, I'll look at this one. So here's a little book you can get. The people this term actually were required to get the textbook, which I thought was kind of interesting because I've decided not to use it in the course coming up, but they somehow got left on the syllabus, and so everyone bought this little book. I think it's still a good book to have, but let me see. It's called The Little Book of Valuation. So it's this this little book right here. So this little turquoise book, Little Book of Valuation by Aswath Damodaran. It's you know, it's just a little tiny book. If you can see my fingers, it's maybe half an inch thick, 3/4 of an inch thick, not even, probably, you know, it's just like that. And you only have to read the first 3 chapters. The first 3 chapters cover, and I think a pretty good summary or format of what the big Brigham and Earhart textbook does. And so if you want to get kind of a head start on it, Don, or anybody that's going to be taking the class in the fall, just get that book. Just go through the first 3 chapters. But
That's
this,
awesome.
yeah, but this little book too will, it also, I think it's a 5-chapter book or whatever, but the other 2 chapters then talk about, same thing we've been talking about, is how you use that concept of intrinsic value to make good investments. So that's really why he wrote the book. But like I said, the first 3 chapters are just really an excellent summary. Some people liked it, some people, you know, it's funny because a lot of students, when I would teach the class, I'd say, well, what do you think about this little book? And they'd say, oh, we didn't really like that much. But I talked to some of the students in my Thursday night class that are taking the financial management class and using this textbook, and they liked the book, or at least a lot of them did. So who knows? Go figure. But that would be good.
Thank you.
Of course. So let's see. So where were we here? Let's go back. Yeah, good. Thanks, Don, for that. For those good questions. So, you know, I'm just showing you guys some resources here. This book, the McKinsey Mind, is a good one to read. I don't think you need to do that for this course, again, because I've kind of laid out this flow chart for you guys. And that's much of what they do. But it's a good resource. And so there's a couple of things I'm trying to do in this course. I'm giving you the framework. And I wish I'd actually done this at the beginning of the course. I just didn't. I actually, to be honest, I'd kind of forgotten that I had this, and I was getting questions, and I started thinking about this. But we spent a lot of time on this several years ago. So anyway, I'm glad I remembered it. But anyway, so I'm trying to give you the framework, and then we're spending a lot of time on individual tools and concepts to put into the framework, and so and books, you know, and resources. So that's so this McKinsey Way, McKinsey Mind. If you really get into strategic, you know, management and planning, and everyone at some point in time will. Okay, you know, just keep this flowchart handy. It'll be a resource. I'm going to put it up on the Intrinsic Value Wealth Report. It'll always be available to you. So you know, you can always come back to this, and we'll probably modify it from time to time. Now the management tools. I don't know if I showed you guys, but let me show you now. My computer's getting, oh, there we go. Okay. So back in book number, I'm sorry. Okay, hold on. Part 1, book number 2. I'm sorry. Intrinsic Value Wealth Report. This section here, book number 5, which is Management and Business Tools and Resources. And so several years ago, I started putting this resource together. And what I essentially did, I don't think I talked about that in this. Did I talk about this book number 5 in this class, or was that the other one? That was probably the other one. You know, you can kind of use this and another resource I'm going to show you in a minute as kind of a checklist. And actually, that's why I put it together, because, you know, in teaching so many MBA classes, and, you know, I haven't got my own MBA a lot of years ago. And one day I was kind of starting to think, well, you know, when we go through an MBA program, what is it that we should know when we come out? And you know, so at the undergraduate level, we're just learning a lot of stuff. You know, we're trying to give people concepts and kind of teach them how to study, because, you know, everyone starts out as freshmen, and you know, just trying to expose them to a lot of things. At the MBA level, master business administration, then you're really supposed to master a lot of these topics. So I said to myself, well, what is it we're supposed to master? What is it we're really supposed to have a good handle on after spending a year or 18 months or 24 months or whatever? And so what I did was, with each different subject, I won't go through each one of these, but let's take finance, for example. So if I click on part 3, finance, then, you know, under finance, what I tried to do is be all inclusive with concepts that one should know. So you should know the Altman Z-score, which we talked about in this class, actually. That was part of Amazon's book. And, you know, the arbitrage pricing model, beta, behavioral finance, you know, so all of these different topics. You don't have to know necessarily all of them, but if they don't look familiar, and what I was trying to do, by the way, when I first started doing this some years ago, was I was trying to actually create hyperlinks. And then I decided that, you know, it's so easy these days to just put in a term, forecasting or market value added or whatever. You get all kinds of good resources just by Googling, right? So I kind of gave up on that endeavor, just left the list as kind of a checklist, if you will. But, you know, you should look through this as you're going through the program and as you get done. So that would be for finance, some of those concepts. You know, for accounting, let's see what accounting people should know. And again, you don't necessarily have to know each one of these things, but you should probably have been exposed to a good number of them. And again, if you don't know what these are, then just Google them. Google target costing or variance analysis or zero-based budgeting or whatever, and see if it's something that applies to you, or something you want to know. So that was the management tools that I talked about here, and then this Vest Pocket MBA. I was trying to get an online, a Kindle version. The books, it was published a little while ago, and I got a copy of it, but I couldn't find my copy, so I broke down and I ordered another copy, which is actually going to be here tomorrow. But I couldn't get the Kindle version. In fact, see, they even blanked out the Kindle version. No, they didn't. Anyway, you can't order that. It'll say it does say item under review. But here's the little book. So it's a lot of this management tools section I actually took from this book, and then I've been adding things to it from time to time. So a lot of those topics are covered in this little book. So, you know, but then I added some categories and I added a lot of different topics in there too. So between this book, the Vest Pocket MBA, and that management tools section, that'll give you a pretty good checklist of things you should know, and most importantly, tools and resources you can use in the strategic planning and management process. You know, other reference books, I've got still a whole bunch I need to put in here, which I'll do over the next couple of weeks. Same with other management tools. But here is one I wanted to point out to you guys. So Bain goes to a website. Again, I don't know if did I tell you guys about Bain Capital or Bain and Company?
I don't think so.
Okay, so Bain and Company is a management consulting firm like McKinsey. You know, the big ones are Bain and Company, McKinsey, Boston Consulting Group, and then all the CPA firms, big ones, Deloitte and so forth, now have their own management consulting groups and so forth. But Bain and Company, so again, you just have to click on that hyperlink, and I think this is still loading. But they have some specific management tools. That's still loading, I know, because it came up earlier today. They have a bunch of management tools you can look at, and study management tools. We're taking a long time. We'll come back to that. Give it time to load. So that's Bain. One of my students found that years ago. I was saying, use management tools in your whatever project I was having them doing, and this person found that. I said, wow, that's really a great resource. Part of strategic planning and management, in fact, a big part, if not the biggest part, is actually figuring out what the enterprise's financing needs are. Because I can guarantee you, after having been doing this for 38 years as an investment banker and venture capitalist and angel investor and so forth and so on, every company needs financing. And so that's a big part of your discovery process. What are your financing needs? And then I put in here MS Project because as your, are you guys, MS Project is Microsoft Project. Has anyone used MS Project, Microsoft Project before? So I don't have it on this computer. I would show you, but it's you know, it's Microsoft is one of their, it's like Excel or Word. They have one called Project, and if you're going to be doing a lot of projects, that's one of the software programs that's kind of the standard that everyone uses now. You know, there's other people, other companies that have come up with other project management software and, you know, different bells and whistles and so forth. But, you know, for the money, Microsoft Project is a pretty good bet. You can get For Dummies books or whatever kind of books on using it and so forth. So, you know, I think for the average user, even the user that does a lot of project planning, Microsoft Project's a good bet. Okay. And then, okay, so then there's the Lean Startup and the Business Model Canvas. So I'm just going to show you quickly these two resources. By the way, we'll take a little break after this, and then we'll take 2 or 3 different 10-minute breaks during the evening here. So here's Steve Blank's website, steveblank.com. Steve Blank is was a Silicon Valley entrepreneur. You know, had several startups, a couple of them were successful, and he just loves to teach. He's basically retired as an entrepreneur. I mean, he probably still dabbles in it a little bit, but he loves to teach. And so he's got a really nice, what do they call those courses? Udacity course on startup businesses. So he really focuses on startups. But, you know, get used, you know, again, I'll give you that resource for his website because it's, excuse me 1 second, guys. It's really a good starting point for anyone that's thinking about starting their own businesses. And out of a class of 22 people, which is what we have in our class, out of 22 people, I will bet you that sometime in the next 20 years, all 22 of you will have started a business, even if it's just a little sideline venture, okay? Because everyone at some point in time wants to start businesses. That's just the way life is, and I think it's great. I absolutely encourage that. But I also do tell people, you know, don't give up your day job until your startup is working, because the failure rate on startups is about 95%, and so yeah, don't give up your day job until your startup works. But by all means, you know, do a little startup on the side and see if it's going to work for you. One really good resource is this Harvard Business Review article, which he wrote, Why the Lean Startup Changes Everything. It's a free download. It's about 9 pages or something. And it's an article he wrote in the Harvard Business Review that talks about this concept of the lean startup. And I won't say much more on that tonight, just in the interest of time, but definitely use that as a resource. Here's a couple other books which he's written or is involved with. Let's see. Oops, being really slow now. So most of the stuff on his website is free. I mean, he's not in this to make money. He's just, you know, he's just trying to, he just loves to teach and just trying to help people out. Now, there's a concept in here which he talks about, and it's where I first became introduced to the idea. And it's something called the business model canvas. Again, in the interest of time, we won't go through that, except for maybe just a real quick peek at it. So what I'm taking you to now is a book called Business Model Generation. And this is the book that introduces the idea of the business model canvas. And then he's got the second book in the series was Value Proposition Design. And then he has 2 new ones. When I say he, these are 2 different authors, Alexander Osterwalder, and I never can say his name, Yves Pignor or something like that. So The Invincible Company and then Testing Business Ideas are 2 other new books in that series, which I've not gotten or read. By the way, the Lean Startup, Eric Ries was one of Steve Blank's students, and he wrote this bestseller. So you can learn about the Lean Startup that way too. Let me just show you real quickly a snapshot of what the business model canvas looks like, just because it's a concept you guys should understand. And by the way, it also does kind of come into Strategic planning, I think, because it's strategic planning in its own way. Business. I'm going to close some of these boxes because I think my computer's getting really slow.
Professor,
Yes.
I know you said like we can do like 10 minutes, but would we be able to have like a longer break so some of us can get food?
Sure.
They designated me to ask.
Okay. Oh, okay. The chat's going around. Yeah, we can do that.
Like,
Okay.
can we do just like 7:30 to 8, like how we like?
Like how we normally do it? Yeah, we can do that.
Okay.
Okay.
While we're asking, is it possible to eliminate one of the papers as well? Because some of us have our capstone class, and that's, yeah.
Yeah, unfortunately not, because the school is trying to keep all the classes synchronized. So yeah, unfortunately that's not a possibility, but I'm happy to give you a longer break. So let me just close a couple of these. But you know, you're working on them in groups. That should help a lot.
We're on the individual portion now.
Okay. I'm trying to close some of these other boxes here. Let's see, a second here. If I don't do these things, it's going to be really slow. Keep Steve blank up there for a minute. Probably shouldn't close that one. Okay, business model canvas. Here we go. Business. Yeah, believe me, there's nothing I would like to do more than to eliminate a paper because I've got to grade all those darn things. But we're all gonna have to suffer through it. So I have 60. Over 60 students, and then think about all those papers. You know, so 60 times however many papers, like whatever it comes out to be, because a couple more group projects. That's a lot of papers. So I feel your pain in more ways than you
-1
know.
would benefit us all.
Yeah, I know. Trust me, I know.
I'm just saying.
I hear you. Okay, so here's the business model canvas that's up. Let's see. So again, I'm just trying to give you a real quick little snapshot of what this looks like. And then we'll take our half-an-hour break. I might get a little bite to eat myself. Never hurts to ask, right? Oh, is this going to be?
That was a brave one. Good job, Joe.
Yeah. Was that Joe? Is he the instigator?
That would be me. That would be
Okay. So here's the business model canvas. And, you know, look at this as being a kind of a strategic planning tool in itself, right? I don't know how I'm going to get rid of that box. Oh, God, I can be able to. I don't want to chat with these guys. How do I get rid of that? I don't know if I can get rid of that. Anyway, here, let's try this. No. Well, sorry about that. You get that little pop-up box on your screen too, right? You can see it. I don't know how to get rid of that. Anyway, so the business model canvas is 9 boxes. And again, kind of think about this as being a strategic planning process, because it is a strategic planning for, well, it was designed for small business, but I think it works as well for large businesses too. Anyway, what you do is on one page, so this is meant to be just one page, you put all these ideas. So key partners, key activities, key resources, what your value propositions are, your customer relationships, your channels. I'm not sure what these 2 boxes are because they're covered up, but the cost structure and the revenue streams. And so, you know, if you think about it, these are really the important parts of a business. But again, so the idea here is that instead of spending, you know, weeks and months and hundreds or thousands of dollars writing a very extensive business plan, and then you go out and you start talking to customers and realize that they have no interest in your product, your idea. The idea is to get get your idea on this business model canvas right away, like, within, they have these startup weekends where literally from a Friday night to a Sunday night, you start a business and you do one of these business model canvases. And then, and a big part of that process, by the way, big part of the startup weekend, for example, is to go out and then talk to customers. So the idea is that you just get this very basic business model canvas done, and then you go out and talk to as many people as you can, and then find out what they really want and what they think of your idea, and then you come back and you pivot. Pivot is the lingo, the terminology that they use in the business model canvas world. You pivot, you make adjustments really to your business model canvas. So again, use that business model canvas. Certainly use that for small businesses, but also look at it for larger businesses as well. There's our familiar SWOT analysis. There's a lot more, of course. These were just kind of some of the highlights I put in here. But if you look at these, the management tools and the Best Pocket MBA, and kind of the other things on here, you'll have a pretty good handle of all the management tools that are available to you. So before I move on, we're going to be able to finish here in 15 minutes to get you guys out for dinner. Before we move on, any questions at this point? Okay. Well, and then so again, this should look like a pretty logical process. So we've had our chief value officer working with the other people in the firm, the enterprise, to start a strategic management and planning process. By the way, strategic planning is a part of strategic management. So if you're just kind of looking for a categorization of things, way to categorize things, way to build a framework, look at strategic management. Strategic management as being the umbrella for all of these things, plus specifically strategic planning. And so what we've been talking about up to this point really is these first 4 boxes are kind of the strategic planning part. And then the next 4 boxes will be really, I think, the strategic. Did I say that right? First 4 boxes is strategic planning. The last 4 boxes really kind of more strategic management, but the whole thing is really strategic management too. So anyway, we have our chief value officer, which is kind of getting things rolling. We calculate the baseline intrinsic value. We go through a blueprint to understand what it is and what tools we have available to us to do the strategic planning and management, to create the value, which is our ultimate objective. We go through the discovery process to find out where we are and where we need to go, particularly in terms of financing. Okay, that's a big one that a lot of people don't really think about, but financing is important. I mean, that's probably the biggest reason the businesses fail is they run out of money. And that happens for a variety of reasons. Okay, so now you go into the next 4 stages. So we're kind of transitioning from strategic planning now to strategic management, but we're really trying to find solutions to what we've identified in the first four stages. So that's where the strategic planning specifically comes in, and then we're trying to come up with specific courses of action and construct plans. And that's just sitting down and putting your heads together and putting pencil to paper and using Excel spreadsheets and all the other stuff, all the management tools that we've covered in this course, plus all the management tools and stuff you learned in other of your MBA courses. So this all kind of now is, you bring it together to really try and find the solutions to what the company needs to do to reach its objective of creating shareholder value. And then when you find those, when you identify those solutions, then you have to implement them. And so, you're implementing the solutions, the course of actions, and the plans. And then maybe one of the most important steps is the monitoring step. Well, actually, the last two, the monitoring and the feedback. So the monitoring really is where the strategic management occupies a lot of that space is in monitoring. But you're doing your business, whatever your business is, you're running your business, and but you're monitoring. You're using all the tools that you've learned and that you will be learning, and that you're designing, you know, you're going to design a lot of the tools that you use. They're a lot of tools you can't just take off the shelf. That's why we have spreadsheets. The wonderful world of spreadsheets. I remember in 1984, yeah, I was working as an analyst for a firm, an investment banking firm, just, you know, young guy starting out, when there was something, the predecessor, one of the first spreadsheet programs was something called Multiplan. And I think that might have been IBM, but I don't recall now exactly. I mean, this Multiplan, we had a copy of that in the office. And I said, wow, no one knew how to use it. But I said, this is really amazing. And I got into spreadsheets from that day on. And then we got the neat new thing about a year or two later, which was called Lotus 123. I don't know if anyone here is old enough to remember Lotus 123. And that was really cool. That was much better than Multiplan. And then, of course, the big daddy of them all was Excel, and that still occupies the main space. Anyway, you know, so you just use all the tools that you have to monitor what's going on and so forth, and then you have the feedback loop. So you're, you know, as you monitor and you see how things are going, then you have to feed back into the various stages here and make modifications. But never lose sight of what your ultimate goal is, which is to create that intrinsic value. So the three red boxes are the value boxes. The value of the firm's operations is technically the intrinsic value. And then you have the total firm value. And then, you know, the ultimate thing, because that's what keeps all of our bosses happy, that's the shareholders, keeps them happy, is creating that shareholder value. And if we've done our job right and we're able to communicate that to the world and so forth, then the market will recognize our efforts. And the market price, or if you're a private enterprise, the price you get for the firm, the value for the firm, should follow that intrinsic value pretty closely. So I think that was it. Any questions on that before we go for our dinner break? Any questions at all? Okay, well, let me turn off the recording. Hold on one second, guys. So stop the recording.